Financial news and information you can trust. This is Market Wrap with Mo Ansari.
Welcome back, everyone, to Market Wrap. I'm Mo Ansari. And on our guest line, Nate Pyle, founder and editor of Nate's Notes. Nate's Notes has held the number one position for 1, 5, 10, 15 years at various times since the Holbert Financial Digest began tracking its performance in early 2000. The Holbert Financial Digest is a de facto standard for gauging the real performance records of more than 130 financial newsletters. Mr. Pyle is a frequent contributor to Forbes.com, MarketWatch.com, and has been recognized for his stellar track performance in Barron's. And you've heard him numerous times right here on Market Wrap. Nate, welcome back to Market Wrap.
Hi, Mo. Thanks for having me.
It's our pleasure to have you back. I have to start with one of your favorite stocks that you've been talking about for a long time, and it has had a big surge. I think you know which one I'm talking about. It's MannKind. It was up to $7 a share or close to it. It's today trading at $5.33. What happened?
Yeah, so we have been talking about it for quite a while, and it's of course we have a long ways to go to get back to some of the prices we were seeing 3 and 4 years ago. It's been a long ride, but to get to your question, the biggest thing that changed is they recently got a new label from the FDA for the drug, which is going to allow their reps, when they're out in doctors' offices, to say a lot more positive things about the drug that weren't on the label before. And as you know, when it comes to talking with doctors and selling pharmaceuticals, you have to stick to what's on the label. You can't, bring in outside stories and so on and so forth. The data that came in for the phase 3 studies to get the drug approved made it look like a not terribly impressive drug. But in the 2.5 years that it's been out since then, roughly, it's turning out that it is actually in my opinion and in the opinion of all the users I've spoken with, it is a much better form of insulin in terms of allowing patients to manage their blood sugar levels and keep them down in what they stay in range, they call it, basically non-diabetic type levels. And so up until last Monday, the company wasn't able to tout a lot of those benefits, but they've now got the data on the label to show that the insulin is in fact faster in and faster out of the body, and that's what's helping the patients do so well on it. Interestingly, one of their competitors, Novo Nordisk, also got a faster-acting insulin approved right around the same time. And though on the one hand it seems like a situation where you wouldn't want a big pharmaceutical company like that also getting a faster insulin, Novo Nordisk is undoubtedly going to be spending a great deal of time and money trying to push this idea that faster is better. And the good news is that when you compare their label for Fiasp, is the name of their insulin, with what's the data in Afrezza's label, it shows that Afrezza is clearly much faster in and out of the body. So if MannKind plays their cards right, they'll be able to tag along on the efforts that Novo is going to be putting out there in the marketplace. So that's really the big catalyst that happened. Whether people are excited about the label change itself, or perhaps there's more to it in the sense that the company has been looking at partnerships around the world to sell Afrezza elsewhere, and undoubtedly the terms of those agreements were probably dependent on what sort of label change they actually got. So now that we have the label change and it's positive, it may be that there's people behind the scenes that are understanding that there's some partnership agreements coming. I can't promise that, but, having followed biotech for close to 30 years, I've learned that, oftentimes people behind the scenes know before the rest of us somehow get to act on it first.
That's how it usually works. Nate, this stock was a 67-cent stock. That's where it made a low, and that was, I think, in May, on May 3rd, and it has come all the way back up to it was nearly $7, so it went up 10 times in price, and now it's at $5.33. Have people missed the boat? Is it over now, or do you think there's still opportunity left in MannKind?
Well, with the caveat that whenever stocks pop like that, there has to be some consolidation and profit taking along the way for the shorter term investors. As we've talked about before, one of the things that's interesting about this story is there is a massive short position in the stock. And frankly, I don't think so. Currently, the company's valued at around 500, 600 million based on the current stock price times the shares outstanding. We call that market cap. I think that a fair value for the company today is somewhere between 2 and 3 billion, which would give you a share price of somewhere in the 18 to say 28 or $30 range. And frankly, the only reason the stock got as low as it did is because this large short position has been leaning on the stock. And of course, as the stock price has failed to rally, it's caused longer-term investors who maybe aren't as convinced to sell their shares as well. And so we've got a classic case where fear was at its highest, coupled with a group of people who were intentionally selling the shares. And so you got an extreme, what we call a market inefficiency or a mispricing of assets. And so I have the stock as a buy all the way up to 10, and I really think fair value is probably somewhere in the $20 to $30 range. Throw in the kicker that we've got this large short position that could cause it to overshoot on the upside, along with the fact that in the world of biotech, usually the further stocks go on the downside because of the fear and greed cycle, the further they also tend to shoot on the upside once they get going. So no, I don't think people have missed the boat, but we're in a volatile time right now, and you just mentioned the stock's at 530 or so. It could just as easily trade back down to 350 before it goes to $9 or $10. So if people are interested in playing the story, I would encourage them to take the same approach we've been taking in the newsletter for years, which is to just buy small lots of it on a regular basis to sort of smooth out some of that volatility rather than placing a single bet and hoping you time things right. Because as you see, if you look at the chart, we've had a couple of days in the past week where there's literally been a $2 swing between the low and the high of the day.
Let's talk a little bit about the stock. It was at $57 was the high, I think, somewhere in 2014, June of 2014. And
yeah, right
here
around
it is
the time they actually got the drug approved.
So that's where it went to $57. What are the chances of this company just being bought out by one of the large companies, one of the large pharmas out there?
Yeah, I think that's a real possibility. Of course, at this point, so to recap for some of your listeners who may not know the whole story, when the drug was first approved, MannKind partnered it with the French pharmaceutical company Sanofi, who was going to sell it, but shortly after they signed that deal, the CEO was fired and a new CEO was brought in. Coincidentally, he happened to be the same CEO who several years earlier had tried to launch an inhalable insulin called Exubera that flopped badly. And I think as soon as he sat down at his desk and knew that was in the portfolio, he said, no, I'm not doing this again. So the drug languished there for about a year. MannKind got the rights back, and over the past year and a half has slowly transitioned from being a manufacturing company, which is what they thought they were going to be, basically produce the drug and let Sanofi sell it, to building their own sales force and working with insurance companies, etc. So the drug's only been out there for about a year and a half in terms of someone actually trying to sell it, and sales are still slow. Whether or not a pharmaceutical company would be willing to spend the money to buy them out right now is hard to say, but it is a situation where, because it's insulin and it's an already established market, if MannKind can grow sales quickly enough, it's going to create a situation where the pharmaceutical companies are going to have to decide whether to step in or watch their market share be taken and the price of MannKind stock go up and become a much, much more expensive transaction. So it's hard to say when or if they will make an offer for the company, but I do very strongly believe that the other folks that are big players in mealtime insulin do have a challenge coming their way, even if it's still tiny little MannKind. And it wouldn't surprise me if some of them are at least trying to figure out how do we deal with this coming threat, and a buyout would certainly be one of the possibilities.
Let's talk a little bit about the overall market.